These are the top cybersecurity stocks to buy as ransomware attacks increase. Cyber threats are a tailwind for these top cybersecurity stocks. Qualies. Organizations are adopting its vulnerability management, detection, and response technology. Tenable. Tenable One sales grew 100% year over year in the third quarter. Palo Alto Networks. This cybersecurity leader has the best integrated solution and will benefit from vendor consolidation. Let's dive in. Here are the 3 top cybersecurity stocks guarding the digital frontier. Welcome to Timely Investment Research. Demand for cybersecurity spending is growing, driven by regulatory requirements and rising ransomware attacks. Organizations are investing in this area to cope with the evolving cyber threats. As a result, top cybersecurity stocks have a revenue growth tailwind. Over the next decade, several factors will fuel increased cyber spending. First, governments and regulators are enacting compliance requirements with regard to cybersecurity. For instance, the Securities and Exchange Commission recently adopted cybersecurity disclosure rules for registered companies. Secondly, there have been severe cyberattacks on companies that have led to disruptions and financial losses. In September, MGM Resorts International suffered an attack that led to a $100 million negative impact on adjusted property earnings before interest, taxes, depreciation, amortization, and restructuring or rent costs. Another severe attack disrupted production at Clorox, leading to a 23% to 28% sales decline. Companies are taking note of the severe consequences of lacking a robust cybersecurity defense. Of course, top cybersecurity stocks have the technology to bolster networks and protect data. As cybersecurity demand grows, these stocks will thrive. Number 1. Qualys. Qualys offers a unified cloud platform that delivers IT security, web application security, compliance, asset management, and cloud and container security solutions. Its cybersecurity platform is purely cloud-based, and customers don't require hardware. Customers worldwide have been relying on Qualys' cloud platform for better security outcomes. Today, the company has over 10,000 subscription customers across the globe. Additionally, it counts 70% of Forbes Global 50 and 53% of Global 500 as customers. Due to soaring demand, revenues grew 19% in 2022 and 13% in third quarter fiscal year 2023. And guess what? Due to the impressive fundamental performance, Qualys' stock is soaring. As of this recording, it's up 60% year-to-date and hit an all-time high on November 22nd. Despite these gains, more upside lies ahead. Existing customers continue to adopt its vulnerability management, detection, and response technology, with adoption rates reaching 54% in the third quarter. The company reported wins both in Global 2000 companies and down market. It is also benefiting due to vendor consolidation since its unified platform provides security across on-prem, cloud, and multi-cloud environments. In terms of profitability, Qualys is delivering solid profits and cash flows. In the third quarter, earnings before interest, taxes, depreciation, and amortization was $68.8 million, representing a 48% margin. Also noteworthy is that earnings before interest, taxes, depreciation, and amortization margins improved 400 basis points year over year. Furthermore, management expects full-year margins to be in the mid-40s and free cash flow margins in the mid-30s. Qualys is well-positioned for future growth considering its organically integrated cloud-native platform. It is introducing ML and AI-based predictive insight into its platform. Given that these innovations will support further growth, it's one of the top cybersecurity stocks to buy. Number 2. Tenable. Among top cybersecurity stocks seeing momentum due to cyber spending, Tenable stands out. The company is uniquely positioned and has benefited from increased public sector spending. It's a leader in vulnerability management and has created a unified platform for exposure management, Tenable One. Customers are turning to Tenable for vulnerability management, cloud security, identity security, web app security, and attack surface management. Indeed, during the third quarter, the firm added a record number of 7-figure customers. Also, it added 58 6-figure customers alongside the 386 new enterprise platform customer additions. In terms of new deals, it saw strong demand from U.S. federal customers. Management highlighted the momentum in this segment. As Emmett Yoren, the CEO, noted, specifically, We experienced increasing strength in the U.S. federal market, evidenced by several strategic seven-figure deals that are reflected in our current remaining performance obligations, RPO, growth of 15%. Tenable's prospects in the future are attractive, given its leadership position in operational technology security and vulnerability risk management. Moreover, it has bolstered its Tenable operational technology security to cover entrance security systems, badge scanners, security cameras, HVAC systems, lighting control, and programming systems. From an investment standpoint, analysts are highly bullish on Tenable stock. They cite the growth of Tenable One and the company's dominance in VM markets. Tenable One is gaining traction and grew 100% year over year in the third quarter, representing 20% of new sales. It will drive revenue growth since it has higher selling prices than a standalone VM. Number 3. Palo Alto Networks. After the recent billings miss, Palo Alto Networks had a sell-off but quickly rebounded. Nikesh Arora, the CEO, highlighted that the miss would not affect revenue growth. He pointed to the solid remaining performance obligation at $10.4 billion to array these fears. Analysts at J.P. Morgan also agreed that the billings miss was a minor hiccup. In reiterating their overweight rating, Brian Essex noted, "We continue to view Palo Alto Networks as one of the best positioned within our coverage to consolidate share within several of the largest and highest priority enterprise security markets." Palo Alto Networks is one of the top cybersecurity stocks, considering its leadership in several cybersecurity areas. It provides comprehensive cybersecurity solutions in network security, endpoint security, secure access service edge, and cloud security. According to Frost & Sullivan, Palo Alto is a leader in cloud workload protection. Its Prisma Cloud platform offers comprehensive cloud-native application protection across public, private, hybrid, or multi-cloud environments. The firm hopes to capitalize on the strong demand for cybersecurity solutions as ransomware attacks increase in frequency. In their first quarter fiscal year 2024 earnings release, management guided for annual revenue between $8.15 and $8.20 billion, an 18% to 19% growth rate. Management also forecasted best-in-class profitability with non-generally accepted accounting principles, operating margins ranging from 26% to 26.5%. Additionally, they expect free cash flow margins in the range of 37% to 38%. With top-tier profitability and its next-generation platform driving eight-figure deals, Palo Alto Networks stock is a buy. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.